Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me at the MarketSite studio, we have Dr. Merav Ozer, global blockchain and cryptocurrency expert, to discuss what a stablecoin is and what PayPal's newly announced US-backed dollar-backed stablecoin is designed to do. Merav, it's great to see you as always. Welcome back to Trade Talks. And this is really an interesting announcement. You have one of the first major institutions.
First, but we'll talk about it.
Let's say more consumer-facing. Let's put it like that. PayPal.
Yeah, exactly.
More consumer-facing.
Exactly.
It's the first move from a major U.S. financial institution that certainly is more consumer-facing.
Right.
So let's start with what is a stablecoin.
Okay. First of all, if you remember, I wrote an article about stablecoin, about a year ago. So I sent everyone to have a view on that. And remember when back, when we had the Terra Luna crisis, I wrote about that, and explained exactly what stablecoins is and everything like that. So this one is not Terra Luna. Please, everyone, hold your horses. Don't get freaked out. It's not Terra Luna. It's not going to, collapse or anything like that. So it's a completely different thing. And if you look at, how I explained, there are different, mechanisms for stable coins, and I maybe, talk about, briefly, so people understand, why this is not going to end up like that, and why you don't have to worry. So first of all, stablecoin is basically a token, runs on the blockchain, like any, Bitcoin, anything like that, but it's not Bitcoin because it is pegged to an asset, or what we call stable assets. Now, usually a commodity. I mean, usually, and most of them, I pegged, to a fiat currency, whether an US dollar, euro, anything like that. And the whole idea about, they're called stable. Why? Because they are less volatile. Stable comes from less volatile because the whole idea, why we started, issuing stable coins, because they say, oh yeah, look, Bitcoin and all other, cryptocurrencies are very, very volatile. So merchants, you can't really use it for payments because, today it's the value is I don't know, $1, and tomorrow it's going to be, I don't know, 30 cents. Per dollar, so the volatility. But then you can also argue that other currencies around the world are also very volatile. Like the Argentina and Venezuela. I mean, it's better for them. This is why they embrace Bitcoin. So we can argue on that as well. But the whole idea here that this one is supposed to be pegged, so whatever the value of that asset is, this is the value of your token. Right. This is what they're called stable.
And this one is US dollar.
Yeah, exactly. So it's pegged to the US dollar. So it's as if you're using US dollar.
Okay.
I mean, you're not paying your cash, but it is pegged to it's as if, you're paying, the value of it is going to be exactly like paying with US dollars. So now there are three mechanisms. The mechanism that they are using, which is a good one in a sense, that you don't have to worry that it's going to collapse like Terra Luna, is that, it is a centralized, collateralized mechanism. Fully collateralized, centralized and fully collateralized. Meaning centralized, meaning that it is controlled by a company. In this case, it's going to be PayPal. They are controlling it, and it is collateralized. They have a trust. They're using Paxos Trust, and I explain, why Paxos. And Paxos Trust, so it's going to be 1-to-1. So every token will have $1 in the trust. So whenever you want to redeem it, you don't have to worry because they will have the money to give you back your dollars.
But to be clear, the U.S. government isn't backing it like they do our currency. So it's pegged to the dollar.
It's pegged to the dollar.
But our government is not backing it. Okay.
It's not. I mean, with stable coins, this is when I wrote an article once that it's kind of like the way the payments mechanism started with Bitcoin, fully cryptocurrencies, and we came to stable coins, and then now we're talking about CBDC, which is central banked digital currency, which is basically what all governments are saying. With already stable coins which are pegged to our dollar, our currency, and they're talking about financial stability and all of that, and they thought, okay, so maybe we just issue one ourselves from the government. So this one is not backed by the government.
Right.
It's not the Fed issuing or any central bank issuing that. It is pegged to a dollar. I mean, in this case, you know, I mean, for that, you know, to be secure. I mean, that people, you know, don't you know, fear that, you know, they're going to have a collapse like what happened. Well, I mean, Terra Luna was an algorithm. It's uncollateralized. I mean, it's a different issue. So this is not it. In here, like, you know, every dollar, every, you know, token that you have with this PayPal, you'll have $1 in trust. I mean, in this case, they're using Paxos trust. And it's interesting that they're using Paxos because Paxos itself, they already have their own stablecoin, which was issued years ago, maybe I think 4 years ago, even more, which is called Pax. So they have their own stablecoin. So it's interesting that PayPal is not using Pax, but they're using their own trust. So they already have the building, you know, of the trust, you know, and all of that, right, you know, to do that. So you don't have to fear that it's not going to be redeemed. And also, I think that like Paxos is regulated. They got, you know, the confirmation, you know, from the regulators, you know, about the state. So it's following all requirements. Another thing that is interesting. Yesterday, August 8th, the Fed issued a letter, I mean, which, you know, I'm going to write about that, which is called a supervisory of non-objection that relates to, they call it dollar tokens, meaning stablecoins.
Right.
So the letter itself, what it says there, that any bank, you know, talking about banks because, you know, they supervise, you know, banks, but I think also, you know, I mean, but it's not surprising that it's right after, you know, PayPal mentioned that comes out. So it's saying that any bank that is dealing or wants to deal with activities that relates to dollar tokens, meaning stablecoins, will have to submit you know, how they are. I mean, how they are establishing risk management framework to activities that relate to stablecoins. It's called.
Well, because the regulators haven't provided any framework.
Exactly. So they say that they have to contact the Fed that they are in their. They call it state banks, whether it's New York or whatever else. And then, you know, show them you know, how they're going to establish, you know, all this risk framework, which is that relates to that. And then I think they have to get some kind of supervisory, you know, requirements and confirmation for that. So you see, the Fed is already being very active, I mean, proactive, I mean, about that, you know, because they know something is happening, which is not a bad thing, because we do need, you know, some, you know, they're probably afraid, you know, that we have the Terra Luna, but this is not Terra Luna, as I said, you know, right, it's something else.
So for people who aren't into crypto,
yep,
why would they even choose this token when they can use PayPal, they can use Venmo?
Correct. So let's put it this way, probably for someone who's not really in crypto, that may not make sense. However, here's how I'm thinking about it. It will open doors for those who are not using it because of all the complexities of how to use it, and then they start using it, and because we're always saying, you know, it's not mainstream. I mean, crypto is not mainstream. Web3 is not mainstream. And, you know, no one is using these applications. Well, because it's cumbersome. Because even if, let's say, you want to buy something, you know, with NFTs, for example, you know, when it was, you know, we had the hype and everything. I'm not saying that they go and buy, you know, NFTs. Or there are all kinds of Roblox, for example. They have the games, you know, it's also Web3. But you have to go and engage with tokens or that are issued, you know, on a blockchain. So the problem is that, you know, you have to take your money, your dollar money, go to an exchange, buy Ethereum usually or some other token, and then, you know, use this and then transfer that, you know, to this and use it, you know, for all these applications. And even, you know, to buy NFTs, you have to you know, it used to be only Ethereum, but now you know, for example, OpenSea, which is the largest, you know, platform for NFTs. Now they also allow you to use stablecoins like USDC. However, still you have to go to an exchange and do that. But here's what I'm saying, that because this stablecoin is issued by a payment mechanism already, like Visa, like MasterCard. So you don't have to go through all the hoopla, because now you can just, use as if your dollars. It's already, going to be converted to whatever stable coins, and it's already going to be, you can use that, for whatever other, applications, because all what you have to do is just, use your PayPal. So it makes things very simple.
Right.
And that's what we always said, the user interface with all of these applications is so cumbersome that people just don't want to go through the hoopla. Sorry for saying that.
So if I understand it correctly, you give PayPal, let's call it $500 in cash.
Yeah.
They keep it on their balance sheet,
Yeah.
and then they issue you a stablecoin. So
Yeah.
it makes sense for PayPal. They get to
Exactly.
the money.
Exactly. You don't care, what they're going to do, as if, right? It's like, but now you can use it for whatever you want. Now it's easy for you to use, let's say in the past, you wouldn't go to OpenSeas and try, to engage, with the NFTs, or you won't go to Roblox and try, to do all these games, or any other, applications that you maybe heard about and was excited, but you felt like, oh God, now I have to go to exchange, and I have to do this, and open this wallet and that wallet, and why, you're making me so confused. So it's all about this the easiness, because we need easiness.
I guess it would be good for global payments.
Yeah, it's also good to global currency and everything, because now, all what I need is because it is recognized, it is a big company, it's a reputable company. It's not, because there are other payment companies that do Web3. I mean, there are. But you say, oh, that's startups, how can I believe them? But this is a big company, very credible. We know who they are. It's not a bank, but they are related to a bank and everything. So I think that will brings credibility to Web3. And that maybe will open the door for mainstream. And that's how I see it.
We'll end it on a positive note.
Yeah, and I'm very optimistic.
All right. Merav, appreciate the insight as always. Thanks for joining us on Trade Talks. And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.